Hello and welcome to Your Stocks live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in. Not such a happy Friday coming in on the day trade because Nifty is trading almost near the day's lowest point as of now. The fall has just intensified further. 22,796 as of now is what the Nifty is holding on to, down almost 1%. Oh, the sharpest fall is coming in from the mid and small cap, that broader market. 4% down for Nifty small cap. Nifty mid cap is down 3.2% approximately. And advanced decline ratio, just look at that because that's clearly in the favor of declines versus advances. We're only around 200 stocks that are managing to hold on to that advance side, while a decline is 2,394. Pressure also coming in on the banking front. All the sectors are trading in the red. That's the market setup looking like today. But this is a show where we solve all your stock-related queries, and we have our experts joining with us. We have Astha Jain, research analyst at Securities, as well as Vaishali Parekh, vice president technical research at Prabhudas Lilladher, to answer all your stock-related doubts. And before I get started, Vaishali, I have to ask you, now what level are we watching out for? 22,800. It's below that mark. Where do we see this stopping? Because that fall just seems to be intensified, and this whole week has been just ups and downs and more downs coming in. So what are we watching out for?
Very good afternoon, all of you. Yes, market is giving us a tough time and we are seeing new lows coming in. So as far as the index is concerned, we have retested 22,786 levels, which was a previous prominent support level. And now if we see a decisive break of that, which is quite likely as per today's fall, I think we are heading towards 22,700 to 22,500 as the next target. And today also banking index, of course, IT sector, all sectors have given a corrective move, but even banking sector has started showing some weakness. So I guess we are still heading for a downward trajectory.
Okay, still some downward trajectory is what we could be watching out for and bracing ourselves for. But okay, that's the market outlook. Let's get started with the query segment then. And the first query today we have is coming in on Tata Power. This is from Madhusudan, who is writing to us from Chennai, holding 150 shares of Tata Power at a price of 415 rupees per share. Currently, stock is trading at 333 rupees. Today also itself is down 4%. He wants to know for the long term, how is the outlook of the stock looking like? Astha, good afternoon. And fundamentally, long-term story, Tata Power still intact no matter what happens in the short term.
Hi, good afternoon to both of you. Yes, talking about this counter, fundamentally, it seems to be okay. All the markets are not in a good mood. So I'm restricting my price target. So yes, we are recommending hold on this counter with the initial price target of around 350 to 375. Talking about this counter, results were more or less, they were, on an average set of numbers which the company has posted. But what is positive is that they have commissioned 4 gigawatt modules manufacturing capacity. So I think that commissioning will really help solar module cell manufacturing capacity which they have commissioned. That will help the company in going forward, especially when they will post their financial number. And companies also plans to go into the nuclear power. So the plans on which now companies embarking into, I think that will help the company in showing positive set of numbers going ahead. But right now, due to the bad shape of markets, we are saying just restrict our price targets. In fact, to our clients also, we are recommending it to hold for the price target of around 350 to 375 at the initial levels.
Okay. And Vaishali, Tata Power on the charts and technicals, what is that looking like? Last 6 months, actually since September, what I'm seeing is from those highs, you've seen that slight bit of a fall coming, trying to make a comeback and again falling. So what is the chart indicating now for Tata Powers? For the long term, does it make sense for the viewer to continue to hold?
In fact, I would say start averaging out at every dip because I think market is in deep oversold. And talking about Tata Power per se, even if I'm looking at a weekly chart, we would be seeing a near-term support at 320. And stocks like these, I think one should accumulate at lower levels. So that way he can average down his prices, cost price also. And when the going is good, he can get better returns.
Okay. Let's move on to the next query for today. This is coming in from Ramesh Babu, who's writing to us from Bangalore. He's holding 230 shares of Bharat Electronics. This is at a price of 250 rupees per share. Wants to know whether he should continue to hold or exit this one. And also, what is the outlook on the stock overall? As of now, the stock is trading at 249, so around his buy price. Astha, for the long term, what's the view coming in for BEL?
Long term is positive, and we are recommending it to hold with a price target of around 300 rupees. Talking about this counter, the results were exceptionally well because it has, beaten down all the expectations on the positive side. Apart from that, the strong order book of around 771 billion itself tells the story that the revenue visibility is very strong, and company will be a key beneficiary of all the electronic opportunities which will be coming forward for the company. So I think all in all, this company is looking strong to us, but our price target at the initial level is only 299 or 300 to be very precise. So one can remain invested in the counter, but for a fresh entry, we would recommend it to, wait for something. Maybe buy on dips strategy can be recommended at the level of around 230 to 225.
Okay, and Vaishali, your view on Bharat Electronics on the charts and technicals, would you suggest the viewer continue to hold or exit?
So see, actually compared to the other stocks, Bharat Electronics technically is still very well placed. There is no damage to the trend as far as the long-term chart is concerned. So I would say my support levels are matching with Astha's. I mean, 230, 220 should be the level to watch for to add more. And I think, this once I would say at least from here on, it can give a bounce to 300, and from there on we can have a relook. So 220, 230 is a level to add more to this stock.
Okay, surely keeping an eye out on those levels over there to add more specifically as well. But let's move on. The next query is coming in from Srinivas Iyer, who's writing to us from Coimbatore. He's holding 180 shares of Tejas Network. This is at a price of 1,153 rupees per share. Wants to know if he should continue to hold this for the long term or look to sell currently. And obviously, he's making a bit of a loss here right now. The stock is trading at 777. Tejas Networks on the fundamentals, what's your view, Astha?
So fundamental seems to be okay because what we have seen that there was a dent in the margin and that was mainly due to the product mix, change in the product mix. And what we have seen that the company has also received orders from state-led BharatNet last mile connectivity in the Tamil Nadu, and they are receiving major orders from their Asian customers. But all in all, results are not in line with the expectation. Plus, what we are seeing is that markets are also not in a good shape. So I think this stock will really take some time to, show some sort of strength. So idea here is to stay invested, but please increase the time horizon from 3 to 6 months or maybe more than that. And then we can see the price target of around 850 to 900 at the initial level. But we are not recommending it to buy at the current level.
Okay, not a buy at the current levels for Tejas Network. And, on that note, we'll actually, Vaishali, what's your view also coming in for Tejas Network?
So the stock is undoubtedly in a corrective mode, but I think some further downside is still cannot be ruled out. It can go towards 700 levels, but I would say if one has to exit in a bounce. It's too much in the oversold. So I think wait for a bounce to exit because right now there is no sign of reversal.
Okay. On that note, we're going to sip into a very short break. But as we sip into the break, here's some good news for our viewers. India's business news leaders, now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the app, CNBC TV18 app, now from the Apple Store or the Google Store, or just scan the QR code on your screen. Welcome back, and it's now time to focus on the Growth Code, a special initiative by Grow and CNBC TV18. Whether you're new or to trading or a seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. Still have with us Astha Jain of Securities as well as Vaishali Parekh of Prabhudas Lilladher to answer all those doubts. Let's move on, ladies, and talk about these queries that are coming in. The first query is coming in from Pihu Jain, who's writing to us from Mumbai. She says, says that she is looking to evaluate her profits alongside the terms like Sharpe ratio, Sortino ratio, but she says that she is not entirely clear about how these terms work and how to use them to compare different trading strategies. She's asking which strategy is the best for assessing the overall trading performance. Astha, let me take it across to you. What's your view coming in here?
So I think both strategies, the usage of both strategies depend, like what kind of volatility you want to assess. If it is a upside or downside, both type of volatility one want to assess, then I think Sharpe ratio is good. Now, what does this Sharpe ratio implies? It just assess the return. When we compare our portfolio returns with the risk-free rate, and now when calculating it, we have to divide it with the standard deviation of the portfolio returns. But what happens in the case of Sortino ratio, that again, it is like, you have to assess portfolio returns minus risk-free rate. But here on the denominator side, the denominator is standard deviation of the negative returns. So the usage is different. In case if you want to assess both type of risk, I mean upside or downside volatility risk, then use Sharpe ratio. But in case of only if you're concerned with the negative or downside risk, then one can use Sortino ratio.
Okay. Let's move on to the next query. We have Shreyas Iyer who's writing to us from Bangalore. He says that he uses moving average and RSI in his trade, I beg your pardon, but sometimes gets conflicting signals. He wants to know whether if there are any other indicators or combination recommendations for forming trends more reliably. Vaishali, let me take this to you.
So I think normally moving average and RSI is very commonly used. But to support, I mean, one should use also Fibonacci, and Bollinger Band will always help a lot for short-term trading or to get the direction of the trend also. So I think you can add these two more.
Okay. And what's your take on this, Astha?
Being a fundamental analyst as well, what I recommend is use these indicators along with the fundamental analysis. Now, what here this suggests that just track the news that is coming into the counter as well as the results. So I think that will really help, in assessing any kind of trend, because fundamental mixed with the technical will always help you, assessing what kind of movement can be there. So yes, even MACD is very good, Bollinger Band is good. But I think all these combined with the fundamental analysis will always give very, very good results.
Okay, let's move on to the next query. And this one is coming in from Kamal Kapoor, who's writing to us from Chandigarh. He says that he has heard that volume plays a very crucial role in confirming breakouts and trends. He wants to know how to read volumes effectively and what volume patterns indicate strong moves versus false breakouts. Astha?
So we really need to see that whether the volumes are spiking up or drying up. If the volumes are spiking up, then it indicates some sort of conviction or interest in the stock, especially when it spikes up with the price movement. And if it dries up, then definitely it indicates that the interest is not there in the stock prices. But always compare volume with their past 20 days. I beg your pardon, it's 20 days or 10 days averages. So volumes should not be read in solely. They should be read along with their past 10 days or 20 days set of periods, and then you can make out whether the volumes are really rising or not. But rising volume along with the price movement will definitely indicate a positive trend. Whereas if the volumes are drying up and price movement is also not in a favor, then definitely one should understand that the conviction or interest is not there in the stock.
Okay, let's move on to the next query. We have Nidhi Roy, who's writing to us from Kolkata. She says that she often struggles to identify strong support and resistance levels, and she wants some practical tips on spotting these zones more accurately and using them for better trade entries as well as exits. Vaishali, what should the viewer be doing right now? Vaishali, I think you're on mute. Okay, let me just take it across to Astha then. Astha, what's your view?
So our view is that we can always use support and resistance level for making entry or exit in any stock prices. Where the major support is coming or the stock prices are just showing some sort of support from particular price level, then it always indicate that it can be a good entry point, because beyond that support the stock prices will not move. Similar is the case with the resistances. Multiple resistance or multiple price movement at one particular point always indicate that from here the stock prices cannot move upward, so some selling can also be done. But I think these are the strategies which cannot be just play solely or in isolation. We really need to see there are various other factors. So always just support and resistance level never work out for making entry and exit. There are other factors also, but these can be used in conjunction with the other factors.
Okay, and Vaishali, we have you back. So what is your view coming in on this as well?
So, well, of course, support resistance, they really give you a direction, they give you the conviction of a, previous bottom and all. But I think nothing in isolation works well. So along with this, I would say use an RSI or a combination of two moving averages, a short term and a more comparatively longer term. So once a stock is at the support and trying to move above these indicators, then I guess it brings in more conviction. So according to technical analysis, never one or two indicators. Use 2 to 3 indicators to make a base for your buying strategy.
Okay, but that was the last query for today. So thank you so much, Astha, as well as Vaishali, for joining in with us on the show today. It's always a pleasure getting your views. But with that, we're absolutely out of time. So thank you so much for tuning in. But don't go anywhere. Up next, you have Closing Bell to take you through the last hour of trade.